Greetings, everyone, and welcome back to Stock Explorers. Today, we're doing a deep dive into a company called Quantum Computing, Inc. That's QCI, or QUBT on the stock market. If you're looking at the quantum space, potentially for investment, well, QCI is definitely one to understand. We want to unpack what they do and why it matters.
Exactly. QCI, they're an integrated photonics company, and what they're really aiming for is quantum machines that aren't just powerful, but also, accessible, affordable too. And a really key point, I think, is that their hardware works at room temperature, uses relatively low power. That's that's quite different from many others needing extreme cooling.
Room temperature, okay, that immediately jumps out. That avoids all the hassle and cost of those cryogenic setups, right?
Precisely. It's a significant practical advantage.
And the applications they're targeting. Sounds quite ambitious. High-performance computing, AI, cybersecurity, even things like remote sensing.
Yes, they're definitely aiming at these high-growth, high-impact areas. It shows a clear strategy.
So our goal today is pretty clear then. We need to really get under the hood of QCI's business, look at what they've been up to recently, pinpoint the positives, the negatives too, of course.
And crucially, figure out the milestones. What should potential investors really be keeping an eye on going forward?
Right. Let's start with the latest news then. There were some big leadership changes back in May 2025. What happened there, and what does it tell us?
Well, what's quite interesting is the strategic angle you can see in these changes. Dr. Yuping Huang, who was already chairman and chief quantum officer, he's now also an interim CEO and president. His background is deep in quantum tech. He founded QPhoton, which QCI acquired. So his appointment suggests, strong focus back on the core technology.
And it seems his immediate focus is on U.S. government contracts.
That appears to be the priority, yes. Landing government contracts could be huge. It brings in revenue, obviously, but it's also a major validation of their technology.
A founder stepping back into the top spot?
Right.
Often signals a strategic push. What about the outgoing CEO?
Dr. William McGann, he oversaw some really important groundwork, like the launch of their Dirac 3 machine, developing the Foundry. His retirement feels like a marker, a shift.
A shift from that core development phase towards what? Commercialization.
Exactly. It looks like a move towards really getting products out the door and selling them. And the other promotions seem to support that too.
Ah, yes. There were others promoted internally.
Correct. Dr. Milan Begliarbekov, he was key in getting their quantum photonic chip foundry set up in Tempe, Arizona, that just finished in March, by the way. He's now COO. So his job is basically scaling up manufacturing, making it efficient. It really highlights how central that foundry is becoming to their plans.
Having that foundry operational, that sounds like a really big step, capability-wise. And the other promotion?
That was Dr. Puya Dana, appointed Chief Revenue Officer, or CRO. His focus, global commercial strategy, expanding revenue both from the quantum machines and the foundry services.
Okay, so putting it all together, leadership changes, the new COO focused on the foundry, a new CRO, it really does sound like a pivot.
Definitely. A pivot towards commercialization, execution, getting things done. They've built the foundation. Now it seems they're focused on building the business on top of it.
Makes sense. Let's dig into that fundamental business model then. Accessible and affordable quantum machines. That's the core idea, right? How does the bigger strategy work?
Well, if you look at their mission statement, they talk about driving the future in high-performance computing and making quantum technology a reality today. It suggests a very pragmatic approach. They're focusing on specialized quantum solutions for problems we can tackle now, rather than just the long-term dream of a universal quantum computer.
Which is quite a change from who they used to be, right?
Yeah.
Innovative Beverage Group Holdings.
Oh, completely. A total transformation. It's night and day.
So their current business really revolves around two main things.
That's right. First, the quantum systems themselves, like the Dirac series and the EmuCore platform. And second, their foundry services, specifically for thin-film lithium niobate or TFLN chips.
And the growth strategy, what are the pillars there?
It seems to be threefold. 1, sell the quantum tech they already have. 2, scale up that TFLN foundry, get more customers, produce more chips. 3, target specific markets, especially datacom and telecom for the TFLN side.
That foundry move seems really strategic. Building it in the U.S., there's a reason for that, I imagine.
Absolutely, and it's critical. Building the TFLN foundry in Arizona is about vertical integration. It's about securing their supply chain for these absolutely essential photonic chips. There have been reports, about past reliance on suppliers in China, so Having a domestic capability, well, it massively reduces supply chain risks, geopolitical risks too.
And potentially speeds things up, maybe lowers costs eventually.
Could do, yes. Faster internal development, potentially better costs down the line. Plus, it positions them well for any government incentives for domestic chip manufacturing.
So this dual-focus machines and foundry services, what's the timeline for seeing real revenue from this?
They're talking about a phased approach. They've guided towards a modest initial revenue from the foundry this year, 2025. The real acceleration, the bigger jump in revenue, that's projected more for 2026. That's when they expect to have scaled up production and signed up more external foundry customers.
So build the foundry business first, maybe target datacom telecom while the quantum machine market matures alongside it.
That seems to be the plan, yes, a deliberate strategy.
Okay, let's switch gears to the tech itself, the core innovation. What makes QCI's approach different?
Fundamentally, it's photonics. They use light, nonlinear quantum optics, nanophotonics. These are the building blocks. And this light-based approach, it sets them apart from many big players using superconducting materials or trapped ions, which often need those ultra-cold temperatures we mentioned.
Right, and their specific computing approach, entropy quantum computing.
Yes, EQC. That powers their Dirac series. These are designed to be portable, low power, room temperature, and they use Qudits.
Qudits,
Yep.
not quids.
Correct. Qubits are binary, 0 or 1, or superposition. Qudits can exist in multiple quantum states simultaneously, D2 states. The Dirac 3, which is commercially available, uses this. It's built for complex optimization problems, can handle up to 949 variables currently, with all-to-all connectivity.
All-to-all connectivity.
Yeah.
Meaning every Qudit can talk directly to every other Qudit.
Exactly, which is really useful for certain types of optimization tasks.
Okay, Qudits, Room-Temp, all-up-all. Sounds like a potent mix for optimization. What about the other system, photonic reservoir computing?
That's their EmuCore system. The first generation is FPGA-based, so more classical hardware implementing the concept for now. It's designed for things like time series analysis, spotting patterns in data over time. Think edge AI application.
Edge AI. And they actually sold one.
Yes, to a major automotive manufacturer. For R&D, that's a pretty significant early win, a validation in a really important industry. The system itself is quite fast, processes millions of nodes per second, has a large internal capacity.
A sale to a big auto company for research. And that definitely signals market interest. Now, back to that foundry. It seems absolutely central. What's key there?
It all comes down to that thin film lithium niobate, TFLN. That's their specialty material for making photonic integrated circuits. QCI argues TFLN has big advantages. You can make components smaller, faster, use less power, and they're very stable.
And they're unique in the U.S. in how they process it.
They claim to be the only U.S. company processing the larger 150 millimeter TFLN wafers right now. And their internal projections. Well, they suggest potential for maybe $180 million in sellable inventory in the first full year. That's assuming, of course, they hit full production and the demand is there.
Big potential number. And the foundry serves two purposes, right?
Exactly. It supplies chips for QCI's own products, securing their internal needs, potentially cutting costs. But it also sells chips to external customers.
Who would buy these chips externally?
Datacom, telecom companies, sensing applications, maybe even other quantum companies. They've already said they're fulfilling initial orders, which is a good early sign.
Okay, so beyond the main quantum computers and the foundry chips, what else is in their tech portfolio? Any other products or R&D?
Yeah, they leverage that core photonics expertise elsewhere, too. They have an entanglement source for quantum communications, operates in the telecom C-band, which is important, also a frequency converter, and a portable quantum random number generator, the UQRNG.
And research.
They're active in remote sensing, things like LiDAR, quantum photonic vibrometers. They actually sold one of those vibrometers to Delft University.
Okay, so real-world application of their research tech, too.
Right. And they're also looking into quantum cybersecurity and advanced imaging, like single-photon sensitive cameras.
So a pretty diverse range, all stemming from photonics. How does this whole photonic room temperature approach stack up against the competition technologically?
It's a really key differentiator. Most of the big names, IBM, Google, they use superconducting qubits, need those massive, expensive cryogenic fridges. Some trapped ion systems also need cooling, though maybe not quite as extreme in some cases. QCI's photonics avoids that deep freeze requirement. That's a fundamental difference in engineering and operational cost.
And the TFLN material itself. better than standard silicon photonics.
They argue it offers better performance characteristics, yes, higher speeds, lower losses in the photonic circuits.
And how does it compare to something like D-Wave's quantum annealers? They also target optimization, right?
They do, yes. D-Wave's annealers are specialized for optimization, similar territory to QCI's Dirac machines. But D-Wave systems typically also require cryogenic cooling. So QCI offers a different hardware path room temperature photonics to tackle similar problems.
But there's still challenges for photonics generally, like scalability, error correction.
Oh, absolutely. Those are industry-wide challenges. Scaling up any quantum computer to be large, fault-tolerant, and correcting errors effectively. That's tough for everyone, including photonics. It's an active area of R&D across the board.
Makes sense. And protecting these innovations, how's their IP situation?
They emphasize their patent portfolio quite strongly. They call it ever-growing. It covers their core tech remote sensing, quantum measurement, RNGs, LiDAR, secure computation, their EQC methods, optical stuff, even machine learning applications on their hardware. An independent valuation early in 2025 actually put a number on it, around $43 million for their granted and pending quantum patents at that time. So they clearly see IP as a valuable asset and are actively protecting their work.
Okay, the tech sounds interesting, potentially disruptive.
Yeah.
But who buys it? What's the actual market viability?
They're aiming at a few key segments. Government agencies, like NASA, are one, then commercially. High-performance computing users, companies working on AI, cybersecurity providers, and remote sensing folks. And for the TFLN Foundry services, the big targets are datacom and telecom. But they also see potential in automotive, biomedical, finance, logistics, energy. Quite a broad range eventually.
Have they landed any significant deals or partnerships yet, beyond that auto R&D sale?
They have, and these early wins are important signals. That NASA contract for using Dirac 3 on LiDAR data noise, that's over $400,000. It's solid validation. We mentioned the auto manufacturer R&D sale, the Delft University vibrometer sale. There's also work with Sanders TDI using Dirac 3 for computational chemistry.
Interesting application.
Yeah, potentially into biomedical research. And for the Foundry, they have an initial agreement with Comtech for TFLN wafers. That shows early commercial interest on that site, too. Plus, ongoing research work with Los Alamos National Lab using Dirac 3 for things like grid management. So traction across government, industry, and research.
Seems like some good strategic wins, even if the dollar amounts vary initially. What about the overall market size they're playing in? Is it big enough?
Well, the overall quantum computing market, projections are all over the place, but generally expected to hit billions, maybe $5 to $7.5 billion by 2030. It's a rapidly growing space. And just the market for TFLN electro-optical modulators, that specific component, is forecast to be near $2 billion by 2029.
Okay, so the potential market is definitely substantial.
Yes, but, and this is important for investors, QCI's current market share is tiny compared to, say, IonQ or D-Wave right now. The investment case really hinges on them capturing a meaningful slice of these growing markets going forward.
And who are they up against? Who's the main competition?
It's a crowded field. You've got other pure-play quantum companies like IonQ, D-Wave, or Jetty, but then you also have the tech giants pouring money in Google, IBM, Microsoft, Intel, Honeywell through Quantinuum, Amazon with AWS bracket. It's intense.
What are the big trends in that competitive space?
We're seeing huge investment across the board, lots of focus on hybrid quantum classical approaches. Cloud access is becoming standard, and everyone is racing to solve scalability and error correction. It's a very dynamic R&D environment with diverse technologies.
So how does QCI position itself amidst all that?
They seem to be positioning themselves as an emerging leader, specifically in TFLN and integrated photonics, pushing that accessible and affordable angle, trying to carve out a niche based on their specific tech advantages.
And how are they planning to actually grow their customer base against all that competition?
It looks like a mix of things. Direct outreach to commercial and government targets, showing up at industry trade shows. That new chief revenue officer hire is obviously key, focusing purely on sales and strategy. They've also mentioned plans to refine their go-to-market approach, maybe partner with others who already have sales channels into specific sectors.
So building direct relationships, but also potentially leveraging partners.
Right. Ultimately, they need to convince potential customers that their unique photonics tech and their foundry offer real, tangible benefits. That's the core sales challenge.
Okay, let's pivot to the financials. Always crucial. What's the picture look like based on the latest reports?
Well, the numbers definitely paint a picture of an early-stage company. Very focused on investment, not yet on profits. If you look at Q1 2025, revenue was just $39,000. Now, that was up 44% year over year, but still, it's a very small number. Gross margin was okay at 33%, but down from the year before. And the operating loss widened quite a bit to $8.3 million, mostly driven by higher staffing costs as they scale up.
But didn't they report a net income for that quarter?
They did, $17 million. But, and this is a big, but that was almost entirely due to a non-cash gain from fiddling with the valuation of their warrant liabilities on paper. It wasn't profit from selling things.
Ah, okay. So not operational profit at all. What about the full year 2024?
Similar story, just bigger numbers. Full year revenue was about $373,000, slightly up from 2023. Gross margin around 30%, again down year over year. Operating loss for the year was nearly $26 million, and the net loss was huge, $68.5 million.
Consistent picture. Minimal revenue, significant losses due to R&D, building the foundry, investing heavily.
Exactly. That's the classic profile of a company like this at this stage.
Profitability, then. Obviously not there yet. What's the path? How far away might it be?
Yeah, currently not profitable from core operations, that's clear. The path relies heavily on two things, really. One, getting significant revenue flowing from that TFLN foundry. Two, selling a lot more quantum machines and related gear and doing it profitably. They have the strategy, but substantial revenue still seems, some distance away. Profitability is definitely a longer-term goal. It needs successful execution on both fronts, foundry and hardware sales.
And funding all this, where's the money coming from? How's their cash situation?
Primarily, they've been funding themselves by selling stock, equity offerings. They raised over $93 million net just in Q1 2025 alone. Similar raise in late 2024. So as of the end of March 2025, they had a pretty healthy cash balance, about $166 million. They've said that gives them a multi-year runway.
Okay, $166 million sounds substantial, but they must be spending it quickly. What's the burn rate?
It is substantial, but yes, the burn rate is also significant. For all of 2024, they burned through over $16 million just in operating activities. The Q1 2025 operating loss suggests that kind of burn rate is likely continuing. So while the cash pile looks good now, they need to start generating real revenue before it dwindles too much. Progress towards profitability is key.
And where's that invested capital going? Mostly the foundry.
A big chunk is definitely going into that Tempe TFLN foundry. They spent almost $3 million on capital expenditures just in Q4 2024, mostly related to that. Over $6 million invested in property and equipment for the full year. That investment is absolutely vital for their strategy. The foundry is meant to be a major future revenue engine. Beyond that, ongoing R&D spending plus building out the sales and marketing teams, trying to drive adoption.
Okay, let's talk risks. Every investment has them. What are the big ones for QCI that potential investors really need to weigh up?
There are definitely several key areas. Technologically, can they actually deliver on the product roadmap? Can the tech scale cost effectively? Is there a risk it becomes obsolete quickly in this fast-moving field? And protecting that IP is crucial.
Market risks.
Big ones there. Will the market adopt quantum solutions quickly enough? The competition is fierce, as we discussed.
No.
And early on, they might rely too heavily on just a few customers. That's a concentration risk.
Financial risks seem obvious.
Right. The lack of profitability currently. The potential need for more funding down the road if revenue doesn't ramp up fast enough, and the stock price itself likely to be very volatile, typical for this kind of tech stock.
Operational risks. Getting that foundry running smoothly.
Exactly. Scaling up the foundry efficiently is a huge operational challenge. Managing the supply chain, finding and keeping top talent engineers, scientists, managers. These are all critical.
And legal risks. I understand there's something specific there.
Yes, that's a significant near-term issue. There are ongoing securities class action lawsuits against the company. The outcome of those is uncertain, but could have major financial and reputational impacts. Definitely something to watch closely.
Those are some serious points to consider. Okay, flipping to the upside, growth potential. What's the outlook there? What could drive growth?
The biggest driver, potentially, is that TFLN foundry. If they can successfully commercialize it and hit those kinds of inventory numbers they've talked about, that could be massive revenue. Then there's wider adoption of the Dirac and EmuCore systems. If they can demonstrate clear value in HPC, AI, sensing, cybersecurity, that drives hardware sales.
More government contracts, too.
Yes, securing more potentially larger government deals would be a big boost, and generally expanding their market share in TFLN as a U.S. supplier and in that accessible quantum niche.
Any new markets or applications on the horizon?
They're looking deeper into their existing verticals, but also exploring new ways to use their Photonics platform. They've mentioned a longer-term goal of getting their tech onto things like PCIe cards, making it much easier to integrate. And interestingly, they recently added an M&A expert to their board. That might suggest they're considering acquisitions to accelerate growth, too.
But again, obstacles remain.
Absolutely. All those risks we just discussed, competition, tech hurdles, market adoption speed, funding, the litigation, just pure execution risk. They're all potential roadblocks.
So long-term, what are the key milestones that would signal success?
You'd want to see significant growing revenue from the Foundry, consistent commercial sales of the quantum machines, a clear line of sight to operational profitability, new generations of products coming out, establishing a solid market position, and ideally getting that litigation resolved favorably.
Right. Finally, let's talk valuation. How does QCI stack up against competitors? Does it look cheap, expensive? Well, what's the story?
Valuing a company like QCI right now is, well, it's really tricky. Its market cap is around $1 billion, give or take. That's much smaller than IonQ or D-Wave, which are several times larger.
Yeah.
Metrics like price to book have been kind of high compared to the industry, maybe higher than IonQ, but lower than D-Wave recently. But the price to sales ratio is astronomical in the thousands, simply because revenue is still so tiny.
So the market is pricing in massive future growth.
Hugely. Based purely on current financials, traditional metrics would scream overvalued. The current stock price reflects enormous optimism about future breakthroughs, market capture, everything going right. Analyst estimates for near-term revenue are still very low, which kind of highlights that gap between current reality and market expectation.
So is it overvalued or undervalued?
Yeah.
It's almost impossible to say definitively.
It's incredibly difficult using standard methods. The valuation seems heavily dependent on hitting future milestones, gaining commercial traction, showing that path to profit, beating competition, maybe getting more funding, and resolving the legal issues. The stock has been extremely volatile, too, which you'd expect for a speculative tech play in a field like this.
So fair value is more like a venture capital bet than a traditional stock assessment right now.
That's a good way to put it, yes. It needs substantial future revenue growth, major successes, just to start justifying the current kinds of multiples.
Okay, this has been incredibly thorough, a real deep dive. Let me try and summarize the key takeaways for everyone listening. QCI is fundamentally a photonics company. They're building quantum machines, aiming for accessibility room temperature, lower power, and crucially, they've built their own US-based foundry for specialized TFLN photonic chips.
That Room-Temp operation and the TFLN Foundry are probably their key potential advantages. Control over supply, unique tech.
Their strategy depends heavily on making both the hardware sales and the foundry services work commercially, big time.
Financially, they're classic early stage, investing heavily, draining cash. Losses are significant right now, but they did raise a lot of money recently, giving them runway.
The market opportunity in quantum and photonics is huge, no doubt. But the risks are also very real: technology development, fierce competition, market adoption speed, and those ongoing lawsuits are a big cloud.
Absolutely. It really goes down to a high-risk, high-potential reward situation. It's a bet on a transformative technology and on this company's specific approach.
So for potential investors, the message is clear. Watch closely. Track the foundry ramp up. Watch the sales numbers for machines and services. Look for progress towards profitability.
And keep a very close eye on how that litigation plays out.
It's going to be fascinating to see how QCI navigates these challenges and whether their unique photonic approach can carve out a really significant place in the future of quantum technology, especially accessible quantum tech.
Well, thank you for that incredibly detailed analysis, and thank you all for joining us on Stock Explorers for this deep dive. If you found this valuable, please do subscribe to the channel, give us a like, and hit that notification bell so you don't miss our future explorations into interesting companies and investment ideas. We'll see you next time.